I'm Kals, and welcome to The Comparable, the series in which each episode spotlights two companies building similar solutions in two different emerging markets. For this episode, which is our last of season 1, which is episode 10, we're spotlighting two leading buy now, pay later platforms in their respective markets, Pagaleve in Brazil and Qist Bazaar in Pakistan. For those who may not know, Buy Now Pay Later, or BNPL, is a short-term installment loan that lets consumers buy a product immediately and spread the cost over several payments, often with no interest if a user pays on time. In developed markets like the United States and Europe, platforms like Klarna, Afterpay, and Affirm are well-known BNPL plays and act as a layer on top of already mature credit rails, allowing consumers to shop more seamlessly online. Unlike traditional credit cards or loans, BNPL is typically integrated directly at checkout on e-commerce platforms, with minimal barriers to access. In developed markets with strong credit infrastructure and a highly banked population, BNPL is a tool of convenience. In emerging markets, however, BNPL can be seen as a tool of financial inclusion, targeting more unbanked or underbanked consumers. Because of low credit card penetration in most emerging markets, BNPL platforms have to navigate limited credit infrastructure, high risk profiles, and regulatory complexity to build robust companies at scale. The companies we're highlighting today are two examples of BNPL plays that have been able to do this successfully so far. Pagaleve, co-founded in 2021 by Henrik Weaver and Mike Greer, is one of Brazil's leading BNPL companies, pioneering a model that's built entirely on Pix, which is Brazil's instant payment system. Pagaleve allows consumers to buy products using Pix-based installment payments without needing a credit card, targeting a massive segment of the population typically excluded from traditional credit. They have a unique transaction-based credit approval model that evaluates each purchase individually, increasing approval rates and providing a more inclusive payment alternative. Pagaleve has experienced rapid growth and achieved profitability, with its revenue growing 6 times in the last year. They have over 10,000 retailers on their platform, the highest of all BNPL plays in Brazil, and have over 5 million consumers that have used their platform. The company has raised significant equity and debt funding since they were founded, and most recently announced a $30 million Series A2 round led by OIF Ventures with participation from other investors, including Endeavor Catalyst. Across the world from Brazil and Pakistan, Qist Bazaar was also founded in 2021 by serial entrepreneur Arif Lakhani. Qist Bazaar provides essentials like electronics, home appliances, bikes to Pakistan's unbanked and underserved populations through Sharia-compliant installment plans, aiming to be the go-to place for household essentials for every Pakistani. In a market that has a very low credit card penetration and a massive unbanked population, Qist Bazaar employs a hybrid physical-digital strategy with over 75 branches across 9 cities in Pakistan, benefiting, as of February 2025, over 75,000 Pakistani consumers. Qist Bazaar has also raised equity and debt funding in the past few years and last announced a $3.2 million Series A round led by Indus Valley Capital with participation from Gobi Partners. While BNPL has taken off in developed markets, making it work in emerging markets is entirely a different beast. And these players have managed to scale and become a bit profitable because they weren't trying to photocopy what Klarna and Affirm did, but instead built for the local and nuanced realities of their own markets, leveraging historical cultural practices of installments and digitizing it at scale. We'll be sitting down with both Henrik from Pagaleve and Arif from Qist Bazaar for this episode. So let's get into it. My guests today are running the leading buy now, pay later platforms in their respective markets. Arif Lakhani co-founded Qist Bazaar in 2021 with the aim to be the go-to place for all household essentials for every Pakistani. Today, they provide essentials like electronics, home appliances, and bikes to Pakistan's unbanked and underserved population through Sharia-compliant installment plans. Henrik Weaver is the co-founder of Pagaleve in Brazil, and interestingly also founded his company in 2021. Pagaleve pioneered a buy now, pay later model built entirely on Pix, Brazil's instant payment system, enabling consumers to leverage this infrastructure to make installment payments without needing a credit card. Both of these founders are reshaping the way financial services are delivered in Brazil and Pakistan through their respective companies, and I'm really excited to dig into their models and lessons from their journeys here today. So welcome, guys. Both of your journeys to launching Pagaleve and Qist Bazaar are really interesting and have certainly influenced how you're building today. Henrik, you were previously working with fast-growing companies like Uber and also the Indian company Oyo when they launched in Brazil. And RF, you've been a serial entrepreneur, which you were selling computers and electronics with your company Electro across emerging markets for decades. So I'd love for you both to share what you've taken from your past experiences to build your companies today, and also what you took, but also what did you leave behind in terms of what you didn't take in terms of what you're building today. So maybe Henrik, if you want to go first, and then RF.
Yeah, thanks, Council, for having me here. So, looking back, I think it's very clear that each experience that I've had contributed somehow to what we have done and what we have prioritized at Pagaleve. So also, I started my career work for Coca-Cola for 5 years. So, and then for Coca-Cola, it's very clear that the consumer obsession, right, of the experience of the consumer made a lot of difference from what we do today at Pagaleve. For McKinsey, also, I think the structuring side of me. And from the latest experience at Uber, for example, there were some strong notions on how to maintain a balanced marketplace. In the Uber case, it was drivers and riders. In our cases, as consumers and retailers, but there was a big similarity. I think so for each of those, I think there were some specific things that definitely contributed to the way I see the business at Pagaleve today, and on how I apply this to my day-to-day and to the day-to-day of my team here.
Great. And RF, for you, I mean, in a lot of ways you were doing, I feel like Qist Bazaar is almost like a graduation in your journey to what you're doing today, but you did a version of installments, even with what you were building with Electro. So would love for you to share a little bit more about that journey and what you really took from that, but also maybe things that you reinvented for Qist Bazaar.
Yeah, thanks, Kulsum, for having me. It's a pleasure to be around with another endeavor entrepreneur. We were doing this offline since the 90s. I started, I actually joined in a company in 1995 that was doing installment sales in Pakistan. And the idea there was that we wanted to make things more affordable for the masses. While I was doing that, I'd also started used computers export out of Canada, which was my prime home, with warehouses in Poland, in Eastern Europe, and in Dubai, etc. And again, focus always, I believe, somehow or the other in my life has been working with the masses. Maybe it's not something that I planned, but it's ended up being that way. The whole idea behind Qist Bazaar was, like you said, a graduation of what the old company Electro was, with the thought that we would give consumer more options. We would be a nationwide brand. We would be more structured, regulated, use data sciences instead of just deciding on who to give, what to give, kind of a thing. So definitely a lot of learnings before coming to Qist Bazaar. Like I think close to about 20 years of doing offline the same thing, having shops all around the city. And the other thing is that Pakistan also graduated in the last 20 years, right? I mean, Pakistan is not what it used to be a couple of decades back. The amount of knowledge that people have, even though the literacy rate might not be high, but I think we probably would be one of the highest watchers of TikTok in the world, right? So the penetration of a lot of equipment has gone through to the masses, and because of their knowledge base is much more, and it's way easier to reach the common man than what it was a couple of decades back.
Very cool. And for both of you, I would love to kind of talk and zoom out about buy now, pay later in emerging markets, because to kind of what you both have been, building for, and RF, you kind of referred to this as well. I think this idea of installments, in Urdu, it's questão, and in Brazil, I believe it's called parcelas. In Portuguese, right? But this concept is something that's been very much cultural and part of society for a while. But, buy now, pay later models have often struggled in emerging markets due to a number of factors like limited credit infrastructure, risk mitigation, weak consumer protection. There's a lot more reasons. I also think one of the bigger mistakes when we saw a lot of BNPL that rise that happened in 2021 that kind of timed with a lot of money flowing to emerging markets was that we saw a lot of BNPL platforms that tried to be more of a Klarna, like basically photocopying this Western model into their markets versus building for the nuances of a very different consumer segment, right? For both of you, it's like, for what you guys are doing at Pagaleve, it's like for people that have never had credit cards, or if it's like a very unbanked, underserved population, it's that way for you both. And so I'd love to hear from both of you, maybe RF first, on how Qist Bazaar and Pagaleve differentiated yourselves from other BNPL plays initially, kind of in the rise of that 2021 period. And also, what is the nuance that many people miss about about your respective markets when they look at BNPL in emerging markets?
Yeah, so like you said, I mean, every country is different, right? Every country has its own inherent gene that it carries. And Pakistani gene has always been that they want to spend, but it has to be affordable for them to spend. So the typical BNPL that came to Pakistan in the early 2020s and 2021 was a company that did everything break down into 3 installments, right? Now that's not affordable for Pakistan. If you look at the traditional BNP players who are not structured, who are not regulated, who still are not regulated, they always did a 12-month plan or an 18-month plan for, let's say, a phone which would cost about $100. So 12 installments of $8 each. Because an average guy is paid about $80 to $200 a month. So how can he actually go and buy a phone and divide that payment in 3 installments of $33 each? He's not going to give half of his salary into buying a phone, right? So when we came in, the whole idea was that give the market what they want and the terms that they want, right? I mean, you can leverage the high interest rates of the country by putting up a higher margin, but you can't break it up into 3 installments or 4 installments. So our term has always been longer. We do give the 3-month and 6-month option, but 95% of the loans that we've given so far for the product has been 12 months or 18 months. And again, the reason is very simple. The per capita income of Pakistan is about $100 to $125 a month, right? And the average product that they buy is between $100 to $250. So you can't break it up into 2 or 3 installments. The other idea was that we wanted to create trust. When Klarna came out of Australia, or when Tabby came out of Saudi into Dubai and all that, everybody trusted everybody. Everybody trusted the online system. Here, the biggest problem is that if you're just an online company, people will think that you're a fraud. Because there have been frauds in the past, right? And for someone who hasn't even done his grade 10, it's difficult for him to actually go online and place an order. He can watch a TikTok video, but he can't really go online and place an order. So we went with the traditional way, which was opening up stores next to where they lived. Now, those stores are actually just facilitation centers. Today, we have close to about 76 stores in 9 cities across Pakistan, with the idea that we want to tell them that if you want to come in and you want to understand how to place an order, we'll do that for you the first time. And of course, as time progresses and you want to buy a second product, you do it on your own. So we didn't want to put something on their face which was not acceptable, which I think has happened in the past in this country in a lot of ways. The other part was that we didn't want to put expensive products into their face. For example, you won't find an Apple MacBook on our website. You won't find an Apple iPhone on our website. You'll find a $150, $125 Chinese product. Even on bikes, you'll find a $300 bike. And the reason behind that is that we strongly believe that the first thing that you can help someone do is to buy a necessity. Phone today is a necessity. A used computer is a necessity. A bike is a necessity. A mattress to sleep on is a necessity. And then as they graduate, you can go for the next products. So yeah, I mean, I think we localized it to what Pakistan really needed. And that's why maybe we might have done reasonably better than others. Because we didn't try to just copy paste the model that you see all across North America or Europe or even Middle East, which is like an hour's flight from here.
Mm-hmm. And within the Middle East, right, Saudi is such a different market. It's a very consumer focused, a much higher purchasing power than these markets. So Henrik, would love for you to share Pagaleve's experience as well.
Yeah, sure. So in Brazil, paying in installments was also something very cultural. So I remember since I was a child, I would go to shopping malls and see the amount of the installment communicated, not their full amount. So very cultural, but until not so long ago, the only true scalable way for people to pay in installments was through credit cards. For you to have an idea, 80% of the purchases made in credit cards today in Brazil are in installments. So it's a very, very ingrained thing in the Brazilian culture, right? However, credit cards only covered for a certain amount of the Brazilian consumers. There were a big number of people that were underserved by that dynamics, right? So if you look at people like credit card coverage in Brazil, 30% of the adults don't have a credit card. In low income classes, 60% of people don't have a credit card. Within those that have a credit card, limit is an issue, right? So they get to the ceiling of the limit that the credit card gives them. And we also have a lot of people that do have both credit card and limit, but just people that don't want or they don't like using a credit card. So they were really, really underserved. So the way that we structured Pagaleve was to ensure that we would have scalability on a merchant perspective, right? So ensure that we would be accepted by merchants so that they would offer us to their consumer base. Today we have around 10,000 retailers that offer Pagaleve, including some of the big names like AliExpress, Temu, and big names in Brazil too. And the only reason why those guys are offering us as a payment method is because it's very seamless and it's very fast to pay with Pagaleve. It takes 2 seconds for us to do a credit analysis. And we have a very high approval rate. So we approve roughly 70% of the requests that come to us. So by being fully accepted on the retailer side, this is how we got penetrated on the consumer side, right? So, and this was sort of a different way to operate than any other company, any other payments company in Brazil. So the focus was first to get acceptance on a retailer level, and then we would go harder on different features for the consumer. And I think this was a successful strategy, because now we see that for every new retailer that we onboard, that we sign a contract and make live, we have several smaller retailers that look and say, oh, this, for example, the drugstore chains. When you sign with Pague Menos, which is one of the top 3 biggest drugstore chains in Brazil, we saw a number of smaller chains look and say, oh, if Pague Menos offer Pagaleve, so this might be interesting for me to also offer, right? So, so the more I sign new retailers, the faster it is for me to sign any additional new retailer to Pagaleve. So there's a clear network effect involved.
Like a flywheel. Yeah, like that flywheel of merchants coming on board. And I've read that you guys actually are the BNPL that has the most amount of merchants on your platform. I'm curious about, for you guys, and you talked about the fact that, you know, the installment culture in Brazil was really focused on people with credit cards before, but you guys aren't, right? And I'm curious, like, who is that? You know, I know you have a couple of different power users, but what are the main things that drives your power users towards BNPL?
Yeah, we have 3 sort of profiles of users in Pagaleve. So we have around 40% of our users are people without any access to credit. So pretty much unbanked, and people that have never had a credit card or have never hired a credit product. So this is 40%. We have our other 30%, which is people that have some limited access to credit products. And we still have a big amount of people, still like around 30%, that have full access to credit. They only choose Pagaleve because it's everywhere, it's easy to use. And this was quite a surprise to us. Like, I thought in the beginning that we will only have an appeal to people that were relatively underbanked or without credit access. And I was surprised to see that even within people that have a good profile, good credit profile, that Pagaleve would still have an appeal for them. So that was pretty interesting to understand. And then in terms of geographic coverage, there's a slightly bigger coverage in the southeast of Brazil, which is the more affluent area. This is where São Paulo and Rio are located. But we have also big presence in other cities. So Brazil, for you to have an idea, has 5.5 thousand cities. This is the country as a whole. We have consumers buying in more than 4,000 cities. So slightly more focused on the southeast, but also with a big presence in the whole of the country.
Very cool. And Arif, would love for you to share similarly. You were talking about this desire to buy necessities, right? So what is for you guys, who is that, power user for Qist Bazaar, and what for them, what is driving the reason they would come to you guys for your products?
Yeah, let me share some numbers for the public. I'm sure you know all of them. So like Henrique said, that credit card is big in Brazil. In Pakistan, 0.33% of people have credit card only. Just 10% of Pakistanis have ever taken any credit in excess of $10, right? So credit card penetration is like not there at all, right? So we from day one have tried to target the other 99.7%, because every other facility, every other credit instrument that's out there is targeting this 0.33%, which is also a big number because we are a 300 million population, right? So more than 1 million people hold a credit card. So the target has been the Sec C, not the Sec B, not the Sec A, and not the Sec D. And the reason behind that is because this is the aspirational consumer who's actually out there now trying to make his life better, trying to afford basic things that he wants to bring in his home one at a time. So for example, in an average home in Pakistan, you would need one bike, one TV, one fridge, and 5 mobile phones. We're going to give you one product and we'll make you graduate to the other one with time, right? So again, we don't want to encourage consumerism, but we want to convert that thought process of buying something maybe from an illegitimate channel, maybe from an unregulated channel where you don't know what you're paying for, you don't know what you're buying, to be buying something which is regulated, which is out there. So we have like close to maybe about 1,000 different products on our website with about 14,000 different SKUs. So you can decide what you want. And Qist Bazaar is basically a seller in its own marketplace as well, just like Amazon is, right? So we have a few other, close to about 100 other participants on the marketplace. And the idea is that we only want to encourage those products that we feel are your necessities. And the target from day one has remained the average Pakistani, and it'll remain as the average Pakistani. So it could be someone coming out of school looking for a new job. It could be someone who's making maybe $150 doing a micro business, like maybe making bread on the road, or maybe driving a Korean car, an Uber car, etc. Right? So that's been our target, and there are lots of them out there.
Mm-hmm. And, you kind of both touched on this. I want to get into a little bit of the how, like in terms of how you make the decision that someone's going to get, your product. And RF, you talked about it briefly, but would love to understand it a little bit more, because I think it's really interesting, right? You're kind of, and I think both of you are kind of meeting your customer where they are. And in Pakistan, being online and offline, especially in a trust-based society like ours, is really important. So I think it's unique because and to the point of not trying to photocopy Klarna, you guys are not tech first as a product, right? Users are first checked against the National Credit Bureau and your own database, and about 25% of rejections happen there. And then the application is then routed to a local branch where a verification officer engages with the user and a social guarantor, right? Which is someone that's probably within their network that can guarantee them for this loan. And I think the leveraging of that online and offline is really interesting. I'm curious if you can share more about the process, but also how it works at scale, right? Because that's a lot of things that are happening in person. So how does that work when you guys scale up the product?
First of all, Kusum, I'm very impressed. Even though I haven't pitched to you as a startup yet, you have all the inside info on exactly what we do. Yeah,
I do. We do a lot of research, so.
Great. So yeah, absolutely. We're not a tech first company. Tech is eventually has to be a big part of what we do. But if you're a new user to us, if this is the first time you're taking credit, and there is no data available on you, which is, let's say, about 75% of loans that we give out, because 25% is repetition. You bought once, you come back in again, it's an algo-based approval, tech comes in, AI comes in, everything looks at you, and you get a product at your place within hours, right? But for the other 75% who are doing this for the first time, our system would look at the area that you applied from. So let's say you applied from a particular street number of a particular road in some part of Karachi, where I'm from, right? We have points given to that particular area. Now, assuming that those points are good enough, you would be asked for either one social guarantor or two social guarantors. Now, what does a social guarantor does? A social guarantor is a guy who lives around you, who could be running a small tuck shop or a milk shop or a school teacher or someone who's your neighbor. He's certifying or guaranteeing the fact that he knows you, right? Now, this is a very physical intensive process. Our person is going to go there and take a signature from him that he knows you and look at your place, assess your income, because 96% of Pakistanis don't get a pay slip. So how do we know your income? There has to be some physical assessment needed, right? Now, when you feel that, oh my God, this is really labor intensive, right? So what we've done is we've actually put these people in different pockets all across the country. So an X branch, so it's a branch network, which means that it's not one company that's selling everywhere. Every area has a branch, and every branch has a sleeper cell. There's going to be a verification officer very close to maybe 3 miles radius to where you live, and that person will come over, check your thing, and will certify you. Now sometimes when you think about it, that with so many people, so we are about 600 people now. You'll be like, oh my God, this is not this is not a tech model, this is not a light model. But the fact is that the cost of people in Pakistan, the average salary in Pakistan is between $100 to $200, right? So it's very much still affordable till you're trying to do this for the first time. Like I said, in the second time you don't have to do that. But we still have another 250 million Pakistanis to touch before we can decide on a completely algo-based model. So I think also because there's a physical part involved, our NPL probably is better than a lot of BNPLs in the region as well. Because you at the end of the day do realize that there is someone who you're answerable to, right? There is a guy that owns you as a customer. So that particular branch is going to own that customer, and that particular branch will also make sure that you keep on buying. They will offer you the products, they will service you in any way possible. So it's a very physical based model, but as you graduate, it becomes a completely algo based model. I see Henrik is putting notes on it. Maybe he's going to go from a tech first model to a physical first model.
Well, I mean, I want Henrik to talk about his, because his decision engine is something that, you've talked about a lot in other interviews. It's also so unique, right? Because it's an approval decision based on more than 100 inputs done separately for every transaction, right? So, and you guys you leverage AI and machine learning, and apparently it can take no more than 5 seconds per transaction. But sometimes maybe someone's approved for one transaction, but not approved for one thing, but they are approved for another. I'm curious about the journey into building this decision engine, the why behind it, and then also how it works for you guys. And yeah, would love to learn a little bit more, because I think it is quite unique.
Of course. So it's a transaction by transaction basis analysis, as you pointed out. So this means that the very same person can be approved in a specific transaction and denied in another transaction, even for similar amounts, right? Because what we do is that we take into consideration several data points, and one of the most important ones is the SKU being purchased. So everything else constant. If the same person is buying, for example, 1,000 reais out of a cell phone and 1,000 reais out of a pair of jeans, the output will likely be different, could be different in terms of approval or non-approval. And then we have different types of approval. So we can just approve fully. We can request additional information in case the person is a yellow flag. For example, the first installment of Pagaleve is always paid up front. I think this helps a lot to reduce risk. So if the person is a yellow flag, and they don't know they are a yellow flag, it's just an internal scoring system. But if they're a yellow flag, we might request, for example, that the person pays us with a bank account or with a wallet that has the same ID number as the ID number that they have informed in our registration process. So this way, the only way to fraud us would be to fraud a whole bank account or a whole wallet account. So this helps on the process. But talking about the process for the decision engine per se, it has 3 layers of decision. It has a first layer of analysis of consumer information. And for this, we use pretty standard sources of information, such as bureaus, data, income data, and things like this. Then we have a second layer, which is an anti-fraud layer, which is 100% proprietary, created by us. And then this is the layer that tries to identify patterns of fraud based on a lot of information from the market and from our previous experience as well. And then we have the third layer, which is the layer of transaction level information. And then this is the most powerful one. This is the one that has more differentiation. This is where we see SKU level data, where we see merchant data as well. And we even consider things such as the MDR, like the fee that the retailer pays us. Because here, again, everything else constant. If I have one retailer that pays me an MDR of 5% and another retailer that pays me an MDR of 7%, I'm going to have a slightly higher risk appetite for the retailer that pays me 7%, right? So I'm not optimizing only for delinquency. I'm optimizing mostly for margin at the end of the day, right? So I think this multi-layered approach for our decision engine, I think it helps for us to balance the risk and to ensure that we optimize for actually the end result for the company, which is profitability. And we one other thing that helps is that we are AI native in terms of our decision engine. So it was all built in algorithms. So the more we grow, the more the algorithms learn and understand the small nuances, like among SKUs, among retailers, among consumers, and everything that matters.
Okay, great. And for you both, I mean, we both kind of, you guys touched on this, right? Obviously with, the AI native decision engine that you're building, Henrik, is ideally mitigating risk. RF, you talked about the social guarantor scheme in terms of being able to have that trust-based network effect there. Are there other ways that you guys think about and manage risk, especially at scale in a model like this? Especially because you guys are serving underbanked or unbanked, an unbanked population. Maybe Henrik first, and then RF.
I think it's mostly trying to be as scalable as possible and using technology. I think that our algorithms operate fully by themselves. We have a team of people, of course, that look into that. We have a whole risk practice, but it's mostly on training the algorithms and updating the models. So for me, the key to evolution and to continue to be in the cutting edge of a risk assessment is to leverage as much as possible whatever we have in terms of automation and technology. I think not much apart from that, at least in our case.
Great. RF?
Yeah, so we're not in the fashion part, right? We're selling mostly household essentials, which are electronics. Like for example, a phone is one of our biggest category. So what we figured out was that if the customer has the possession of the phone or a fridge, a refrigerator, or a TV, then he'll pay on time. But if he's used you just to pick up that product and sell and get the money and pay some other debtor that he owes money to, then he's not going to pay you. So in the last, even before Qist Bazaar, in the last 10 years, we worked on how do we make sure that the guy uses the product and does not sell it, right? So what we've done now is that, for example, a courier company that we use will pick up whenever he drops the phone to you, they're going to take the box back. And you will get the box, the packing back after you paid 6 installments after 12. And the reason behind that is that when you go out to sell that phone, that $120 phone, that phone goes down straight away to $60 if the original box is not there. If you bought a fridge from us, a refrigerator from us, the warranty card will be returned back to us, and you'll get the warranty card back once you pay 6 installments. Because without that warranty card, the value of that particular device has gone down by 60-70%, right? So that's one thing that we do. The other thing that we do is that, this guarantor thing is also the easiest way to acquire customers, because those guarantors will also become your customers. Now, for them to become your customers, the guy that they've given a guarantee for has to pay on time. So if person X is guarantored by person Y and person Z, person Y and Z, it's in their best interest that they make sure that person X pays on time, because their credit, their track record will be built on how X pays their thing, right? So of course the credit engine that we have sees all of that, and based on that, they will give an algo-based approval to a guy who's never been to our store, but he's been a good guarantor for a good guy, right? So I think that's been one of the biggest things. And the last thing would be the aspiration to buy more. If we were to give you everything that you needed today, then I feel that our bad debt, our NPL will be much more. It's just the fact that you want to graduate, you want to buy the next thing, you want to buy furniture for your home, you want to buy that ceiling fan which speaks less than the fan that your parents had in their home, or the air conditioner that makes your life a little cooler than what it would be otherwise. It's that aspiration that also makes you pay, right? So we keep on telling you about it. Like, if you're late, one of the messages that you would get on your phone would be that you're actually foregoing all those things in future just because you're not paying these $12 on time.
That's interesting. It's also like thinking about, when people originally buy, it's like the have to have items, and then it eventually graduates to the nice to have items, right? As like consumers become more aspirational because they have that in the Maslow's pyramid screens, the hierarchy of needs. It's like first we address what we need, then we graduate to what we want, right? Which I think is interesting. For both of you, you guys have talked about publicly that your companies are both EBITDA profitable. RF, you said in interviews that it was from day one, which I think is really interesting and exciting, especially given that you guys have a lot, like 600 people you talked about and all of this stuff. And Henrik, you also talked about achieving it recently in interviews. Sustainability is typically quite hard with BNPL platforms globally. So I'm curious about how you both managed to achieve that level of sustainability, and what did you prioritize to achieve that? So maybe RF first and then Henrik.
Sure. So I mean, this is my 2.0 in life, right? We've been EBITDA positive prior to coming into this particular genre of doing BNPL. I strongly believe that if you're a funding based fintech, like if you're a lending fintech, and if you're not EBITDA positive today, you'll never be EBITDA positive, because this whole idea of doing customer acquisition at a below market value thing doesn't work in countries like Pakistan. And Kulsum, you would know that by looking at some other startups too, right? That Pakistani consumer, I'm sure Brazilian is the same. They're very smart. They'll come to you when you're cheap, but as soon as you become expensive, they'll walk away. So our pricing has been the same from day one. We take a back margin and we put a front load on it. So between the two margins, it's been EBITDA positive from day one, and the percentage has been the same too. Of course, with economy of scales, the EBITDA percent of the top line has improved. Maybe has improved about 60% from where it was, let's say, in the first year of operations. We just finished our 4th year in September. But I feel that any model today in a country like Pakistan, if they're not actually showing the consumer the reality from day one, when they start showing the reality, the consumer will turn away and they'll say, you know what, goodbye. Let's find another guy who's gonna take a loss and who'll service me. So yeah, I mean the philosophy has been the same, and probably because of that, and a bit because of the age as well, we've been very, very strict about running a tight ship. Even though we have 600 people, a big percentage of the top line turns into EBITDA.
Great, thanks. Henrik?
Yeah, so one important context here is that I came from two schools of thought that prioritized volume growth very strongly. So those were Uber and Oyo.
Yeah, like the one, Uber, exactly.
And Oyo, for you to have an idea, Oyo, I was CEO in Brazil for the operation from start to end. We became the biggest hotel chain in Brazil in 1 year with 600 hotels. So that was really, really strong volume growth. So for me, the benefits of growing fast were very clear. However, things changed a lot in 2021, 2022, right? I mean, the whole market shifted, and I think that was for good, right? So in my head, I have two strong forces that are balancing out between themselves, which are still the need to grow. I think growing is absolutely essential, and growing fast is essential. However, there's another side of frugality that is also now, it's very, very strong in my mind since day one in Pagaleve, right? So make sure that we are really, really efficient on each dollar that is spent. I try to pass on this culture to the team, and it's not easy. You might say, oh, you just give this a direct, but it's hard. Even with the senior leadership team, it's hard. I think it's the CEO's role to ensure that this gets ingrained into the culture of the senior leadership team of the company. And it will always be a challenge. So strong frugality, I think it's a very, very important thing to have, to make sure that you only spend on what's necessary. But you cannot. You also need to invest on what's needed to invest. You need to go bold in what's needed investment. So it's not a easy thing to do. So you need to know like what's the line like that you need to have in order to still be bold, but at the same time be frugal, right? So I think those are the things that are in my mind on this.
I mean, it's interesting because even in my original question is like, what did you take and what did you leave behind? In some ways, you took the big bold bets that you mentioned, but also kind of left behind some of like the unnecessary like spending and all of that, and really kind of kept frugality at the center, which I love. For Henrik, you guys are really known for the fact that Pagaleve has been built and is leveraging Brazil's instant payment system, PIX, to build at scale. And in Pakistan, RF, our instant payment system, Rust, is now recently, it's gone live as well. I'm curious about, if we're to zoom out as our last question for this podcast, how are you both seeing the future of financial services and innovation in Brazil and Pakistan? And how do you both see your companies evolving to meet changing consumer preferences and demands over time? So maybe Henrik, if you want to go first, and then RF can bring us home.
Yeah, of course. So I think in terms of evolution of buy now, pay later as a sector in Brazil as a whole, I think a couple of things that I see that will continue to evolve and that will continue to be game changers are, I think one is on how we do underwriting. I think so the more AI as a whole will evolve, the stronger this will be an advantage for companies such as Pagaleve, which levers a lot of quantity, of amount of information to use in the decision-making process. So underwriting will become more and more important as a competitive advantage as we progress. Second one is on regulations. The Central Bank of Brazil has been very important as sort of an agent to foster innovation. I think it's a really good example that I always talk about. And so regulations will also be an important lever as they continue to progress in order to unlock further growth for sectors such as buy now pay later. And I think the third point is that, and it's a product of those two things, is that buy now pay later, it's not yet, I don't consider it yet as a mainstream payment method in Brazil, but definitely it will become. I think what we're seeing in terms of numbers, if I look at our power users, for example, and the people that are getting to power users, the speed into which they are adopting Pagaleve and the frequent increase makes us believe that this will actually become a pretty big part of people's day-to-day lives, and will be considered as a mainstream payment in not so long from now.
Very cool. RF?
Yeah, I think Rust for us has been a game changer. I'll give you an example. 2022, our first year of operation, we had 12% of people that were paying back to us digitally. Now remember, we need them to pay 12 times in a year, right? So 12 installments, 88% physical is a lot of work. And then some smart, some smart part-timer came up with that idea that why don't we incentivize people to go digital and use RAS to pay us. So first we started with them paying through bank, now we do QR code. And the idea there was that we would do one little giveaway every week for someone who's paid on time, who's paid through a digital means, and we would waive off that installment that they've paid, right? We would just refund the installment back to them. Today, 72% of customers in Qist Bazaar pay digitally, and they pay through RAS. So now what that means is that the guy's all manual, he's not digital at all, but he goes to a convenience store right opposite his house, goes there, gives us our QR code, and pays through that QR code. The money comes in, sells in our SAP straight away, no hands touched, no dirty thoughts coming into anyone's mind that they're collecting cash and they want to take the cash home. Everything is done digitally. So I think RAS has been great. I think State Bank and associated regulators are really, really working hard on making this as a mainstream kind of a thing. And also to what Henrik was saying, I think the more customers you have, the more data points that you have. At the end of the day, he and I are running a lake, right? It's a lake of data. So for example, if you find a doctor who's graduated out of a certain school and his payment method is digital, then you can see a lot of things associated to it, of where he lives, what does he do, where does he actually go to pay, and that area is a better client for you than an area that you haven't explored yet. So I do think that with time and with volume, more and more things will get digital, especially for Pakistan, where cash has always had a lot of nonsense attached to it, as you probably know as well as I do. And the government is trying their level best to at least get the consumers off it, whether they go on an e-commerce platform or whether they go buy in a storefront. So, by the way, 93% of sales done in Pakistan is done on storefront. Only 7% are e-commerce, right? So just like Brazil, actually, we are even further than Brazil right now. So our point has always been to be there on the storefront, get the client there, but then convert him digitally so that he can pay digitally and then buy the next product digitally.
Yeah, I think super exciting times for both markets. I think Pix is one of the reasons Brazil's fintech space is like massive right now. And I think for us in Pakistan, Ross going live to me means that we've barely scratched the surface. There's a huge amount of opportunity that's coming up the chain. And I'm excited to see how both of your companies are going to be part of that huge evolution that's happening. Thank you both so much for being part of this. Really appreciate listening to both of you. And I really hope you connect offline as well, because I feel like there's probably a lot of like shared lessons in your journey. So thank you guys for being here. That's all we have time for today. Thank you guys for listening, and thank you all who've listened this entire season. We'll be coming out with hopefully a bonus episode where we talk through some of our lessons and reflections on this season. But I think what was really interesting for me about this episode is that to me, it reflects on something that we've talked about throughout the season. And it's kind of been this recurring theme, right? Is that you kind of had this wave of emerging market plays in that 2021, 2022 period where there was a ton of funding coming into emerging markets, mostly from international VCs, where people were just basically photocopying what they saw happen in developed markets and just placing it in emerging markets. And I think the companies that have been able to do well and survive are the ones that have been able to really leverage the realities and the nuances and what's happening in their local markets, right? And so for Qist Bazaar, as an example, it was really thinking about what is it that people really need and providing those types of products and then evolving and growing from there and seeing a user as a constantly shifting being who will soon become aspirational and thinking about the products that they're going to want after the products that they need. And then, for Pagaleve, obviously what I found really fascinating was not only did they leverage Pix, which is Brazil's instant payment system, but also the fact that they've built like a transaction-based approval system and really leveraging AI and machine learning, but really also thinking about like the cultural practice of installments in Brazil and really thinking about how to build for that user and taking something that's already culturally acceptable, but also kind of building it for a very different type of population. So hopefully you enjoyed this episode as much as I enjoyed recording it and getting to know both of these founders. And stay tuned for our bonus episode that will come out soon after this one. And then our next season, hopefully in February, is the hope. So thank you guys for everyone who's listened, watched, subscribed. I appreciate all of you. See ya.